Hello everyone, welcome back to my channel. So this video marks the end of the week number 26 in this road to 100k realized return challenge, and the week began on quite a positive note, albeit even though it was a shorter week because of the Martin Luther King's Day on Monday, which coincided with the inauguration of President Donald Trump in the United States. And the week developed in quite a positive way. On Tuesday and Wednesday, markets went up most of the way, and looking here at the Nasdaq, which is the most relevant index for us, as you can see here, it ended up going quite well. But then on Friday, things pulled back a little bit, but nonetheless it was still a positive week, and so things went quite well for us. I should say that we have a lot of things to talk about. As you can see, we no longer have 4 motor company shares in here. And why is that? Because after I posted the video on the start of this week, and we showed that we sold at the time 600 shares of our 4,300 shares of 4 motor company, and as you can see, this sale was right here. The price continued to rise, and even though we sold this at 10.31, which was above our average or our cost base of 10.22, the price of the stock continued to rise. And eventually it got to a point in which it became worthwhile for us to buy back the stocks, or the options, the 37 option contracts, call option contracts that we have sold previously. They were due to expire exactly this week, yesterday on January 24th. And even though we sold these options at 4 cents per share, as you can see, see where these are. Yeah, these are right here. So we sold initially these options at 4 cents a piece, or 4 cents per share. It became to a point in which the price rose in a way that it became worthwhile for us to buy back these call options at a loss, so that we can sell the entire holding outright. And we managed to do so. As you can see here, we took a loss because we sold the options at 4 cents, and we sold these 37 contracts at a higher price. 5 of these contracts were at 7 cents, and 32 of these were at 8 cents. So we took a loss, and the loss is already reflected here. I decided to do all the calculations before this video, so that this video does not become as long for you guys to see. And so I took a loss, which is reflected in here. But then we just went ahead and sold the entire holding, and as you can see here, we were able to sell these shares at a price of 10.39 and a half. And also, as you can see here, so 1,500 plus 1,500 is 3,000, plus 700 is 3,700 shares, which in addition to the 600 that we sold earlier in the day, we basically sold our entire holding. And even though we also had to pay quite a lot of money in fees, it ended up being a profitable transaction. We ended up basically making some money on that. I have all the calculations in here, but basically what happened was that we lost on a net basis on the premiums. So basically considering all the premiums that we received from the covered calls, in which we use 4 shares as a collateral, we lost on those. We had a loss of around 52 euros net, because we had a loss here, and we also had to offset this loss that we took at around August, in which we had, yeah, this is it, we had to buy back calls and at this loss in order to avoid having sort of a $700 or $800 loss. And so this was a small hit compared to what we would have been taken if we kept these calls. But despite that, we managed to get out of the entire trade in a profitable way, the entire position in a profitable way, because this was the average cost, as you can see right here. Now 1026, because the 600 additional shares are also accounted for in here. But for the 3700 shares that we sold, we had this net capital gain, $458. Let me put this a little bit more zoom so that you can see it better. But the net capital gain, $458.51. And consider that we had an overall result combining capital gains and premiums. We had an overall result of a gain, a profit of $406.24. So because of the premiums that we lost basically. And we have also to consider that for the 600 remaining shares, we also had a profit of on net terms, after all the commissions, all the fees and all that, $383.69. And because we had an overall result of $402.94, this is because we also had some premium of a covered on covered calls, in which we use these 600 shares as a collateral. So overall, we had only in terms of capital gains 458 plus 383, so this was more or less a bit more than 800 euros in profit, and of course not counting with the premiums, which we had a small loss. But yeah, the overall result was much positive. And so basically, yeah, I'm very happy with this trade, and especially so because we managed to sell as it turned out. And of course we didn't know at the time that this would turn out to be this way. But as you can see here, for motor company, if we look at the chart, and let's use the chart for only this week, as you can see here, we managed to get rid of the entire holding at around this time. As you can see, the stock, this was later in the day on Tuesday, the stock still managed to rise a little bit more to finish the session on Tuesday, but it had basically a gap in here to start the trading day on Wednesday, and never recovered for the remainder of the week. So we ended up selling the entire holding at a very opportune moment. And if we had not taken this opportunity, probably we would still be holding the entire lot of shares. Of course, that would also mean that we would not have had this loss here, this loss in these call options, because these call options would have expired worthless. So we would not have this loss, but still it ended up being a net positive situation, because the capital gain that we had offset the loss in a big way. And so yeah, I'm happy because it turned out to be a very timely decision for us to leave, and basically leave the entire holding, exit the entire position. And also because this simply unblocked a lot of buying power, so that we could then, as we did, start working on the Pfizer position that we have, try to sell it. And after that, we basically start to selling puts on the Pfizer shares. Over the week we sold 18 put options, and because all of them expire worthless, we basically kept the premium for ourselves, and we still also used the stocks we had, or the shares we had on QQQ, to sell more calls, which they never reached. They never got anywhere close to the strike price, and so they still remain in here, and we simply pocketed the entire premium. And so for the time being, this is our current situation, and next week we will continue to sell more puts on Pfizer, try to see if we can buy more shares at a lower price, lower the cost base, even though we are not that far from the current cost basis, but because we still have the money, and it would be beneficial for us to get rid of this stock also as quickly as possible. The stock is very good. The stock is a good quality stock, as you can see right here, and looking at here at the fundamentals. It has a 5-star rating, so it's pretty much undervalued. It has a fair value of around 4,200. Most of the consensus is to buy the shares, all right, so because the stock is pretty much undervalued. And on Friday, it was also the ex-dividend date, so now, because we are already past that date, today is Saturday, 25th of January, even if we sell the stock, for example, next Monday, we will still receive the dividend on March the 7th, and the dividend will be, so it is 43 cents per share. We have 400 shares, so this will be a little bit more than 1,600 dollars rather. So yeah, it's good for us. It's a plus on top of all the premiums that we intend to collect with it for next week. And as you can see here, it's not going to be possible to sell call options with a strike price that we wish to sell, which is our cost basis, because yeah, it's only 1 cent. It's not worthwhile to meddle with this. And even if we go to the 2-week option, as you can see here, this is much more appealing. Probably we will sell some of these, but we will have to wait and see what happens with the price at the beginning of the trading session. For sure, what we will do is sell more puts, and it will depend on how much. It will be either the 25.5 or the 25. It will depend. We'll have to see. But the point is to lower our cost basis to try to sell the shares. Also, because it's much better to have ETFs in our portfolio than specific or individual stocks. And yeah, basically this is it. Let's just input our trades in our scoreboard. I think it's also convenient for us to show that because of all of these trades that we did. And right, so now here, this is up until the activity statement up until January 24 of 2025. All right, and if you look here, we managed to increase our total of realized gains, so realized gains at 27.156.43. Month of January looks like it's going to be a very poor month for us because of the plunge that markets had during the course of most of the month, but I'm sure that now, because the markets have recovered lately, things will improve and we'll be able to increase our realized returns much faster. And so to just show you basically what we did here, all the cells shaded in gray are the ones that I want to show you about, because these were the changes that I made before the video. So basically this lot of 400 shares that we bought, we were obliged to buy because the puts were exercised, because these were bought at 13, we had this loss. All right, and so basically here, let's just put this in green as it should be, and here let's just take this color out. All right, and let's see what else. And yeah, the next lot of shares, these were the shares we bought at 10.50. all right, 400 shares. And because we also sold at 10.39 and a half, We also had a small loss of $27 of 42 cents here. All right, but then it came the ones in which we had the gains. So here, now this is, let's put this in green, and here we're gonna take this shade out because these were bought, we bought directly these at 10. We had the gain of 193. These ones also, this was the cash outlay overall, and this is the gain we had on the stock after we sold them, because we bought this at 9.77. Let's take these shades off as well, and these shades off as well, and this ones as well. Of course, because all of these were bought at around 977, 974, 982, 988, 977. These were the cash outlays, and these were the profit that we had once we sold the shares. And here, yeah, basically we this is because we closed the position on Tuesday. This we sold this this put that we closed. The strike price was 10 and 10.50. We still had this loss to contend with, so the numbers will stay as they are here. And this is the record of the selling of the 3,700 shares. Now this goes here. Yeah, we still had a small loss here because these were of course the shares that we bought above the selling price, but these ones were all in the gains, and still we managed to sell these shares, the 600 shares as you saw before, and we had this income, of course, not which is not offsetting the price that we at which we acquired the shares, but because the price at which we bought the shares is right here, so hence the profit of around 400 that we had. And basically this is it. All right, now I put also this covered in gray because I mentioned in the video that this was a covered call when it was not. It was a cash covered put, and we can see right here on the trades, right? So this is already put in, and yeah, these are the Pfizer shares that we sold here. So these were the first 200. Now let's just do this another way because I think it makes sense. Let's see, this was also on the 21st that this trade took place. So let's see, yeah, this was all on the 21st. So, and these were sold at 4 cents. So what we are going to do here is basically change this to 17. All right, and now we are going to determine the average price. So these were two contracts at which we sold at 5 cents each. Let's put here another parenthesis, right? And now we're going to sum 0.04 cents times the other contracts that we sold, which was 15. And now we close the parenthesis and we divide it by the 17 contracts. And as you can see, it is a little bit above 4 cents the average premium that we received. So let's just put this in like this, and now we have to calculate what were the total amount of fees that we paid for it. All right, so this is it. So no history. All right, let's put this right here like this. All right, so in here we have the Pfizer, the two contracts that we sold right here, and now we have to add these other commissions. So as you can see here, it was 1.12 that we had before. Let's bring this up a little bit more down, do it like this. So it was 1.12 for the two contracts that we initially sold, which were right here, plus 54 cents for these 5 contracts and 7.08. Right, so we paid in total 8.74. All right, so here is 8.74, and these expire worthless because it's right here. So these are 18 contracts because then on Thursday I sold an additional contract, but we'll get to that in a moment. So also these QQQ calls that we sold on Monday, on Tuesday, they expire the next day and they expire worthless. So let's close this position. Now let's just put this also in here, and this, let's put this in here. Right. Now for some reason this is not, I'm not sure why is he giving me another number. What is this? Well, I have to see what this means, but basically this is not correct. So I'll have to see what's going on here. All right. Oh, I see. Now this is the problem. Apparently there is a mistake here. I'm not sure why. Because yeah, this was supposed to be like this. There is a mistake here. So yeah, there is a mistake here. So we need to correct this. Right, now it's correct, and now, all right, now it's correct. Now it makes sense. And so these expire worthless. We got this profit. The profit, nothing to write home about on annualized terms. It's pretty meager still, but that's the best we could do. And then, because I was also very much tied up with work, I could not sell overnight or 0 DT options. I had to sell 2-day options to expire at the end of this week for QQQ. So I sold 3 more contracts, right, at the 23rd, as you can see here. So let's put this in, copy here. This was on the 23rd, and this would expire the next day on the 24th, which it did. Again, the same problem, right? Not sure why there is a problem with the formulas here. So let's just copy here. All right, now should be fine. QQQ again. This is a covered call. Apparently, oh, all right, no, this is correct. So 536. Again, 3 contracts. These were sold at 29. Let's see the commissions. The commissions were 3.12 actually, 3.12, and they also expire worthless. All right, which was, I believe, this was a little bit better, but nothing very significant. Now there is still one more trade for us to do, I think, because this is here. Now the QQQ, and yeah, and this the QQQ expire worthless, and we have also this contract right here, this Pfizer contract. So let's put here the same dates exactly, because this is exactly what happened. And Pfizer, oh, all right, this was a covered. This was a cash covered put actually, right? The strike price was the same, 25.50. This was only one contract, and the premium was 11. All right, and the commission was 105. So 11 and 105, and this also expired worthless along with the other with the other puts right here. Alright, and this is done, of course, because this was only a 2-day trade, and at the time the stock was already hovering around 26, so this is a pretty juicy premium for just 2 days, and hence this huge return on annualized terms. Now this is it, and we'll have to see what's going to happen in the following week. The plan, as always, is to try to reduce the cost basis of our last holding of individual shares, Pfizer, and continue to sell calls on QQQ to see if we can continue to gather more premium out of this. I did not adjust this calculation right here, but I think I can do this now. So the QQQ, here it is. We can add also this premium right here, and I believe that the Pfizer shares should be around here, and yeah, indeed they are. So it is better for us to just filter by Pfizer. It's easier. All right, so here we are. And again, yeah, there is nothing for us to do, because these are cash covered puts, these are not covered calls. So yeah, everything is correct here. And yeah, this is it for today. We'll reconvene at the beginning of the next week to start the week number 27. Until there, feel free to leave your comments and questions in the comment section below. I'm also available on LinkedIn in case you want to send me any DMs, and also feel free to like the video and subscribe to the channel. And yeah, I'll see you all next Monday.